Hey, hello class. Good morning. So, so today we're going to continue the discussion of the budgeting. So, why today we're going to discuss um, why there's a need for an alignment of the budgets. Okay, so the budgets of the different departments to the whole organization. So we also discuss the responsibility centers and controllable costs, as well as the forecasting techniques. Pero we will end at using the linear regression. Okay, so just to recap what we have discussed last time. So we were able to discuss the relationship of budgeting the relationship of budgeting to planning and performance evaluation. We have already also discussed the advantages of budgeting as well as the time frames. Then we discussed the methods of developing budgeting, such as the participative, the authoritative, and consultative type of budgeting. So in participative type of budgeting, so every person in the organization is being asked or consulted as to what would be the sales and what would be the likely expenses that will be incurred in the future or in the next year or in the next few years to come. We also have the authoritative budget. So the budget is comes from the top management, and it is implemented by everyone in the organization. So only the top management makes the budgeting. And then lastly, you have the consultative. So it is a combination. Okay, so the employees are asked. However, the final say or the final approval will come from the top management as to the final budget or final master budget. So we also discussed the advantages and limitations of each type of budgeting. Then we discussed the budget development process. So what are the steps or how to do the budget development? So we have steps 1 to 6. Okay, so we will start now the new discussion. Okay, so let's talk about the budgetary slack and the impact on goal congruence. So when we say goal congruence, so it is the alignment or aligning the goals of two or more groups or uh, two or more departments in the organization. So as used in planning and budgeting, it refers to the alignment of the goals of the individual managers with the goals of the organization as a whole. So in every organization, so it is composed of a lot of departments. Okay? And these departments or offices have their own managers. Okay, so and each manager is evaluated based sa ilang performance ana nga office nga ilang gihandolan. Okay? And sometimes one of the document or one of the metrics, performance metrics that is being used sa pag-evaluate sa atong mga managers are the budgets. Okay, so for example, for marketing department, so perhaps their performance evaluation would be the the achievement of their quota. Okay, so what is their quota for this year? So um, it is being compared with the actual performance or the actual results of the sales in the entire month or perhaps in the entire year. So if they have met their quota, so of course that's a kuan. That is a positive evaluation to the manager. Whereas kung dili makaabot sa quota, so posible na nga, let's say hatagan og mga negative nga reinforcement such as perhaps dili sila there's no additional bonus. Okay? So the corporation of course wants to have more sales. Okay? So gusto nila nga they have more sales, they have more revenue. However, if the budget is being used para i-evaluate ang performance sa manager, okay, so there is a likely chance, okay, nga posible ang i-budget sa marketing, especially if they are using the participative type of budgeting. There's a high possibility that the manager would underestimate its sales para ma-achieve ilang quota. So para dili sila para makakuha gyapon sa bonus. So there's already a misalignment, or this is sometimes called the sub-optimization, nga dili align ang goals ni organization or sa top management o dili align sa goal ni department manager. Okay, so another way of um, another case of misalignment perhaps is mangitag paagi si marketing manager to increase the sales to the detriment of the uh, finance department. Okay, let's say gusto nila nga mo taas ilang sales, so uh, gi-allow nila bisag kinsa ang mangutang sa product or sa service. Okay, but without undergoing a kanang mga character or credit investigation. So yes, nag-increase silang sales, but the problem is kung kato ba tanan ma-convert into cash, kung kato ba tanan ma-collect nila. Knowing nga para mo increase ang sales, so grabe ang pagpautang, and then wala na pangayo og down payment, bisag kinsa na lang ang gipautang para ma-increase ang sales. So the goal of the department manager posible nga ma-achieve, pero it will detriment the whole organization. So posible na siya nga daghan kag sales pero wala di ay siya na convert into cash. So mas magansi ang company because they will incur expenses. Okay? So each department have their own goals, and sometimes di sila magkasinabot sa ilang mga gusto. Okay? Like for example, the marketing department would like to increase the sales, so they will propose to the top management nga mag-advertise. Okay? So magbayad sa advertise. However, the finance department might disagree with the proposal. So perhaps wingon ang finance department niya, we don't have cash for that. Okay? Or it's not worth it. Okay? So it's up to the top management how to deal with this problem. Okay? So the sub-optimization is also known as the budgetary slack. Okay? So budgetary slack is the practice of underestimating the planned revenues, so para mas dali siya kabuton, and then overestimating the planned cost, so that ang actual result would look more profitable than the budget or the forecast. Okay, so if the department managers will underestimate the planned revenues and overestimate the planned cost, then it will cause a budgetary slack, and the budgetary slack will not achieve or will be a hindrance to achieve the what we call the goal congruence or the alignment of the goals of each department to the goals of the whole organization. Okay? So what we want to achieve is the goal congruence. So the best way to avoid this budgetary slack problem is to not use the profit plan as managerial performance evaluation, but only as a tool in the planning and control purposes. So dili siya dapat himuon nga uh, performance evaluation. Otherwise, it will cause budgetary slack. So responsibility centers and controllable costs. So control in an organization is exercised through the responsibility centers. So kani mga responsibility centers, so usually it's the uh, department heads or mga office heads. So especially if each of these department will create their own budget, so they are responsible for their own budget. So the budgeting must also be done at the responsibility center. However, responsibility center managers should be responsible only for the cost that they can control or for the revenue that they can control. Okay, so revenue and cost. Because namonggoy cost nga dili nila control. Like for example, the salary of the department heads. So wala man sila control ana because it's the decision of the top management. So they are only accountable, they are only responsible to the cost nga they can control, such as mga cost sa supplies nila, okay, sa gamit nila sa kuryente. Okay, so those costs nga kaya nila i-control should only be used to evaluate the responsibility center managers. So controllable costs are costs for which the manager has the authority to make decisions about how money will be spent. So kumbaga kaning mga controllable costs, sila ang naay authority to make decisions on how the money will be spent. Okay, so such as training, seminars. So of course kung sila ang nihangyo, sila ang ni request. So if na mga cost nga gi-allocate ra sa ila but it is not controlled by those responsibility centers such as allocation of kanang internet expenses, okay, or Wi-Fi expense. So kung tanan offices sa organization ni gamit og Wi-Fi or internet, the cost may be allocated to each department. So bahin-bahino nila. However, they don't have the control, okay, over the Wi-Fi because it's for everybody, okay. Non-controllable costs are costs that are ordinarily controlled at a higher level in the organization. Okay, so example katong manager salary or bonus and also katong akong gingon nga cost kay gi-allocate sa tanang departments but not controlled by or the department managers or office managers wala sila say ato nga cost. So let's go to the forecasting techniques. So katong finance and financial markets, so especially for those nga na-under nako ato nga subject, so you were able to forecast or to come up with a financial plan for the next 5 years using the past 5 years nga performance sa company. So that's actually what we call forecasting and financial planning. So one of the most important parts of the planning and budgeting is the identification of the assumptions that a company must make about the future. So these are the assumptions that we have set for the company. So usually kani nga mga assumptions are taken and analyzed through the historical reports or historical financial statements. So we believe that those assumptions will still continue in the next years to come. Since planning and budgeting involve looking into the future, the company must make some assumptions about the outlook for the environment in which its business operates. So the assumption must always be tested. Okay, so does it mean nga mo na assumptions in the past? Mo sad gyapon na ang mahitabo in the future. So we have to assess the environment first kung applicable pa ba na siya. Okay, let's say ang cost sa materials nga imong gigamit. Okay, wala ba ni saka ang presyo karon? Okay, kung ni saka ang presyo, then you have to change your one of your assumption. Okay, or the salaries perhaps ni increase na, or perhaps this year wala kayo tay sales because of the pandemic. Okay, so your assumption must be uh, always questioned every time that you make a budget. Okay, or if we forecast the budget, all the assumptions that uh, we have in the past must always be challenged to determine if relevant pa ba gyapon siya sa karon nga environment. So one of the techniques that is being used to forecast is the mathematical models. So a mathematical model is an assumption that attempts to represent an actual situation. So for example, you have a situation nga the product, each product or each quantity will be sold at $1,000 each. So R, which represents the total revenue. So to get the total revenue, then i-multiply na to ang 1,000 sa number of selling units. So the revenue can be represented by this mathematical model. So you have revenue, or R is equal to 1,000. So this is the price per unit times the quantity, or X. So whatever is the quantity here, so multiply that 1,000 by 1,000, that would be the total revenue. As for the cost, so if you recall, di ba, ang cost is composed of the fixed and variable cost. So pwede ang total cost is represented by the FC, or F fixed cost, plus um, the cost per unit sa variable. So variable cost per unit times times X, or the quantity. So pwede sad makahimo og inana nga mathematical model. So the mathematical model represents the real situation. So that is why it is important to carefully construct the equations that we use in the forecasting. So we use this model perhaps kung naatay fixed nga salary. Okay, so or the salary is based on labor hours or number of hours. So the mathematical model can be used. Another way of doing the forecast is called the linear regression. Okay, so linear regression analysis still uses the historical data to make forecasts for budgeting purposes. So I think when my students submitted their um, forecast for the next 5 years, so what they did is to get the average nga percentage throughout the 5 years, the past 5 years, and mo na ilang gigamit to increase the sales perhaps, or to increase the cost. So let's say ang ilang nakuha nga data is 5% ang increase each year. So every year gina-increase nila og 5% based sa katong previous nga year. However, the better way of doing the forecast is to use the linear regression. Okay, so how to use the linear regression? So in forecasting, the historical information is used in various ways. The past performance may be used to discover a pattern. So pwede na to gamiton to discover a pattern kung uptrend ba or paubos ba or the same or somehow constant, or the past relationship between two factors may be used to determine whether or not a past cause and effect relationship can be used to predict the future results. So the one of the primary challenges in using the in forecasting cost is finding the cost driver. Okay, so if you remember your activity-based costing, so the most challenging one is to look for the right cost driver that fits the data. So in other words, the causal factor in the cost and effect relationship. So for example, for organization uh, that heavily used labor or very labor intensive, meaning the products are being produced manually. Okay, so we can use the labor hours as a cost driver. But for machines, okay, so or capital intensive nga manufacturing, so dili kaayo inana ka somehow the cost for salary is fixed. However, since most of the production is used by machines, so dili pwede nga labor hours atong gamiton. Okay, so mas mas better kung we use the machine hours as the cost driver. So in determining the cost. So we have two basic forecasting methods. So we have the time series methods, so which look only at the historical pattern of one variable and generate a forecast by extrapolating the pattern. So we we graph first the data for each year or for the past years, and then we try to extrapolate. Okay, so using one or more of the components or patterns of the time series. And the other way of forecasting is called the causal forecasting methods. So this forecasting method which look for a cause and effect relationship between the variable being forecasted, or also known as the dependent variable, and one or more variables, the independent variables. So usually ang time series is one dependent variable raog one independent variable. Whereas the causal forecasting, the dependent variable is caused by a lot of independent variables. So we will only tackle the time series methods. However, it will be more examples will be given because in your business analytics, it will still be discussed. So time series analysis. So the time series data reflect historical activity for one variable over a sequence of the past time periods. So the time series method uses only the historical values. So they only use the past performance or the past reports in an attempt to find a pattern that can be used in the forecasting the future. So from this data, pangitaon ang pattern kung naa ba, and then that pattern is used in the forecasting. So the most frequent pattern and the most amenable to use for forecasting is the trend pattern. So tanawon ba kung ga-increase ba or ga-decrease ba ang data over the years? So ang sales ba ga-increase or ga-decrease? So if ga-increase ang sales, there's also a possibility nga it will continue to be upward in the future. Or kung downward, then posible na nga mas maubos pa na in the future. So take for example the trend. Okay? So kanang solid nga line, kaning green, if you can see, so this is the actual pattern or the actual results or the past results. So let's say ang gikuha niya nga report is for the past 10 years. Mo ni gini ang actual data. So kung tanawan na to siya, so medyo upward ang iyang trend. So meaning pasaka. Although there are occasions nga niubo siya like in the third year and on the seventh year. But other than that, so medyo taas or mo mo fit siya sa line. Okay. Now we use the regression analysis to smooth this deviation. So we're only smoothing out the trend. So kung mag-create tag regression line, so it will look like this. So kanang broken line, that's for the regression line. So mas dali mag-forecast if ang graph nga imong makita is straight line compared sa kaning lahi-lahi or variable ang iyang pattern. So for easy forecast, we need to come up first with the regression equation, okay? Para makuha nato ning regression line. So trend projection and linear regression analysis. So a time series that has a long-term upward or downtrend can be forecasted by means of trend projection. So the trend projection is performed with a simple linear regression. So when we say simple, there's only one dependent variable or x, I mean y, and there's only one um, independent variable, which is the x-axis. So simple linear regression analysis relies on two assumptions. So number one, variations in the dependent variable or the value being forecast are explained by variations in one single independent variable. So there's only one x and one y. So the relationship between the independent variable or time or specific value and the dependent variable sales or whatever is being forecasted. So that is the linear. So it's called linear because as you can see gaina, we form a straight line or the regression line. So the regression, simple linear regression has this equation. Okay, so you have the y hat equals to a plus bx. So b is stands for the slope. So y, let's say this is the sales. So a is the constant coefficient. So meaning um, okay, so let's say this is cost. Okay, so kung cost din siya, so the cost can be, we can use the simple linear regression niya equation. So A is the constant coefficient. So meaning sa constant coefficient that regardless of the number of units that the company the company will produce. Okay, regardless of the quantity of the company will produce, this A will still be incurred. Okay, so in our cost accounting, so si A usually denotes the fixed cost. Kasi fixed cost, maski wala pa kayo na produce, you will still pay the fixed costs, so such as the depreciation of the machines, or perhaps the salary of some department heads. So, and then you add the BX. So B stands for the slope, and X is for the quantity. So B also denotes the variable cost per unit. Okay, so pilay variable cost per unit, multiply that by the quantity produced. So by combining or adding the fixed cost plus the variable cost, then we can come up with uh, the total cost. Okay, so also or the dependent variable nga y. So the line of best fit as determined by simple linear regression is a formalization of the way one would fit a line through the graph data by just looking at it. So it is the line nga mo fit halos tanan data in the actual results. So on a graph, the difference between each point and the corresponding point on the regression line is the deviation. So those points daw kuno nga wala sa regression line, it is called deviation or the difference between the regression nga atong gigamit nga formula versus the actual results. So the resulting regression line, katong broken line nga nakita gay na, that is called the line of best fit. So the line of best fit, so almost all the data are found on the regression line. Okay, so mo kuan siya mo musulod. So simple linear regression may was used to calculate the regression line. So pag kwaon magamit tag linear regression yung formula, we can now calculate the regression line. And then from there, you can forecast on the graph as presented earlier as an example of a trend pattern. So the regression line is called a trend line when the regression is being performed on a time series. Now let's go back to um, the regression line. So it is easy to forecast. Kung naatay regression line, it would be easy to forecast maski pag dili ka mag-compute. Okay? Let's say, i-continue nimo nga pattern for the next 10 years, next 5 years. So, ang kaning dire, medyo pataas pa na siya. So, for example, for this, on the 11th year, so natin nakita nga broken line. So, kung inot ato na i-continue, kung ato na i-continue, then most probably on the 11th year, diri na siya mo, ang sales would be kaning line. Okay? So, kaning line asa man na belong. Okay, so for example, if this is 3.5 or 3.5 m, so what is in between 3.5 and 3 m? So perhaps naasa, ang sales would be 3.25 million dollars or $3,250,000. So kaning regression line, we can continue that for the next 10 years or next 20 years. So by just looking at the graph, we can already determine what would be the probable sales or the possible sales on that year. Kay kung kani atong gamiton the actual results, it's hard to get to get the pattern. So we cannot forecast kung what would happen in the future. What would be the sales in the future. Unlike sa regression, we can determine kay kung sa toy mo tunong sa line, that's the possibility nga mo na siya ang sales. Okay, so again, we will have a more explanation or discussion on the simple regression, and I will also give more examples on this when we continue to discuss this in your business analytics nga subject. Okay, so we're done. If you have questions or clarifications, please ask now. Okay, so if you have no more questions, then I'll see you in your next subject. Okay, so see you at 10:30 for your business analytics. Okay, thank you for attending. Thank you for listening.